European stock markets are trading lower this morning, with the UK's FTSE 100 index off around about 40 points, while the Euro Stoxx 50 index is lower by 38 points. The Stoxx 600 index is down over 10% since May 22nd, the peak, and in the current currency space, the euro is trading a little lower against the dollar to around about that 131 level. Peripheral bond yields are a little higher, but still stable, and commodities are weaker across the board, particularly gold, which is down around about $8 at the moment. Good morning, I'm Ishaq Siddiqui, and welcome to a daily market bite. I'm going to give you a quick wrap up of what's going on in financial markets today. So, of course, we are still ruminating over the Federal Reserve's plans to tinker quantitative easing by the year end and end the program by mid-2014, and that's weighing on investor sentiment since the announcement last week. So we're seeing increased volatility in the market, which is not a surprise. However, there's been the major development over the weekend, particularly Friday, is the liquidity squeeze in Chinese interbank money markets. That story developed over the weekend with an intervention by the Central Bank of China to soothe investors' nerves and pump in liquidity. However, that also signaled that China's the tightening in the Chinese money market is a massive concern, and Chinese lenders need to start lending and shoring up their balance sheets. So a bit of a risk coming out from that side, and that's weighing on investor sentiment on the whole. We had a massive sell-off in Asian markets overnight, with both the Shanghai index and the Hong Kong index now touching 4-year lows on the back of these worries, and that had a spillover effect on commodity prices and a resultant effect on European basic resource indices, resource shares, and that's been pressuring price action on the whole. Now in Europe, we've had the German IFO survey, which is pretty much a mixed bag. It was good on the headline front. The current conditions index slipped a little lower, suggesting that even though we are seeing a moderately encouraging sign out of Germany, it's nothing to be too excited about, and it's not going to really affect the outcome of GDP. Going back to China briefly, Goldman Sachs cut its growth forecast for 2013 and 2014, citing worries about the tightening interbank money market, and at the same time also the weaker economic conditions in China. Now, when it comes to what we're looking for the rest of the day, there's not much out in the US economic diary, so at the moment the US stock futures are indicating a lower open on Wall Street, with the Dow Jones down around about 90 points and the S&P off near about 8 points. And in terms of economic data for the rest of the week, today is very quiet, so the attention is going to be on the US GDP figure on Wednesday and the UK GDP figure on Thursday. On top of that, we've got German unemployment figures on Thursday, and we also have a number of US housing reports during the course of the week. So that's all for your daily market bite. Tune in for another one next week. Thanks for watching.